Today's video is a must-watch for anyone who has $10,000 sitting in the bank and is eager to make the most of it. We're going to delve into some unconventional yet highly effective strategies that can help you maximize your money's potential. So, let's dive right in and explore the 5 unique actions you should take if you have $10,000 in the bank. Number 1. High-interest savings account hunting. When you find yourself with a substantial $10,000 in the bank, the first step toward financial optimization is to reevaluate your choice of savings account. While the familiar local bank might offer convenience, it might also offer you paltry interest rates that barely keep up with inflation. This is where the concept of high-interest savings accounts comes into play. Think of your savings account not just as a place to store money, but as an opportunity for growth. High-interest savings accounts, often offered by online banks or credit unions, can present a game-changing alternative. These institutions tend to provide interest rates that are significantly higher than those of traditional brick-and-mortar banks. While the difference in percentage might not seem staggering at first glance, the compounding effect over time can lead to substantial earnings. Imagine this. With a traditional savings account, your money might accumulate interest at a rate that's barely noticeable. However, with a high-interest savings account, your earnings will be more pronounced. This difference in interest accumulation can potentially translate into hundreds of extra dollars per year as your money grows. By choosing a high-interest savings account, you're effectively making your money work harder for you. Your $10,000 isn't just sitting idly. It's being put to work through interest accrual. This can make a significant impact over the long term, especially when combined with consistent contributions. While the allure of fancy investment vehicles might beckon, optimizing your savings account choice is the bedrock upon which you can build your financial strategy. It's like preparing the canvas before painting a masterpiece. The stability and accessibility of a savings account, coupled with the enhanced growth potential of a high-interest option, create a strong foundation for your financial journey. In a world where opportunities for financial growth are abundant, but often come with varying levels of risk, a high-interest savings account provides a comparatively safe and straightforward option. It aligns perfectly with the principle of preserving your initial capital while still reaping the benefits of compounding interest. Number 2. Peer-to-peer lending diversification. If you're seeking an alternative investment avenue for your $10,000, it's time to explore the realm of peer-to-peer lending. This distinctive strategy invites you to step into the shoes of a lender, directing your funds towards individuals or small businesses in need. In return, you'll receive interest payments on your loan, potentially offering higher returns than conventional savings accounts. Peer-to-peer lending platforms like Prosper and Lending Club act as intermediaries, connecting borrowers with investors like you. It's a win-win scenario. Borrowers gain access to funds they might not secure through traditional avenues, while investors like you get the chance to earn interest on your lending. However, let's address the elephant in the room: risk. Peer-to-peer lending does carry a degree of risk, as with any investment. Borrowers might default on their loans, impacting your potential returns. But here's where diversification comes into play. Instead of investing your entire $10,000 in one borrower, you can spread it across multiple loans. This way, a single default won't sink your entire investment ship. Before jumping in, thorough research is paramount. Study the platforms, their terms, historical performance, and borrower profiles. Take advantage of the tools and information provided by the platforms to make informed decisions. Moreover, consider your risk tolerance and investment goals. Peer-to-peer lending can be a medium to long-term investment, so align your strategy accordingly. While peer-to-peer lending introduces an element of risk, its potential rewards can be enticing. The interest rates you earn from lending can outpace the growth of a traditional savings account. It's a chance to put your money to work in a dynamic and unconventional way, potentially reaping the benefits of a diversified portfolio. Number 3. Invest in personal development. Your $10,000 isn't limited to just financial investments. It can also be an investment in yourself. Consider using a portion of this sum to enroll in courses, workshops, or certifications that can enhance your skills and knowledge. Personal development can open doors to better job opportunities or even inspire entrepreneurial pursuits, ultimately increasing your earning potential in the long run. In today's rapidly evolving world, continuous learning is a valuable asset. By dedicating a portion of your $10,000 to furthering your education, you're essentially equipping yourself with tools that can help you stay competitive and adaptable in various industries. Whether you're looking to advance in your current career or explore new fields, acquiring new skills can give you a significant edge. When choosing personal development opportunities, focus on areas that align with your interests and goals. Are there skills you've always wanted to acquire? Is there a certification that could propel your career forward? Research various courses and programs to find ones that provide reputable credentials and valuable knowledge. Online platforms offer a wide array of options, from technical skills like coding to soft skills like communication and leadership. Moreover, personal development isn't limited to formal education. Consider attending workshops or conferences that allow you to network with professionals in your desired industry. These events can provide valuable insights, inspiration, and connections that can contribute to your personal and professional growth. Investing in yourself isn't just about short-term gains. It's a strategy that pays dividends over a lifetime. The skills and knowledge you acquire through personal development can lead to salary increases, promotions, and even opportunities to venture into entrepreneurship. By honing your expertise, you become a more attractive candidate for employers and clients alike. Ultimately, personal development is an investment in your self-confidence and self-worth. As you acquire new skills and achieve personal milestones, your sense of accomplishment and belief in your abilities will flourish. This newfound confidence can radiate into all aspects of your life, enabling you to tackle challenges and seize opportunities with greater enthusiasm and determination. Number 4, start a side business experiment. Why not use a portion of your funds to kickstart a small side business or passion project? Whether it's crafting, consulting, content creation, or any other venture that aligns with your interests and skills, dedicating a bit of your $10,000 can provide the resources needed to turn your ideas into reality. Even if the venture doesn't become a full-time endeavor, the experience gained and potential extra income can be invaluable. When you have $10,000 in the bank, it's a golden opportunity to explore your entrepreneurial spirit. Consider channeling a portion of your funds into starting a side business or embarking on a passion project that has been lingering in your thoughts. This can be anything from creating handcrafted goods, offering consulting services, developing digital content, or even launching a small e-commerce store. By allocating a fraction of your savings toward this endeavor, you're providing yourself with the necessary resources to breathe life into your ideas. This investment can cover initial setup costs, marketing efforts, equipment, or any other essential elements required for your chosen venture. Starting a side business isn't just about the potential financial gains, it's also a fantastic learning opportunity. The experience of running a business, regardless of its scale, exposes you to various aspects of entrepreneurship, including budgeting, marketing, customer interaction, and time management. These skills can prove invaluable in both your personal and professional life, enhancing your overall capabilities and mindset. Even if your side business doesn't blossom into a full-time career, it can still offer valuable returns. The additional income generated can supplement your current earnings, helping you reach your financial goals faster. Moreover, the sense of accomplishment and pride that comes from turning your passion into a tangible venture is immeasurable. Remember that starting a side business requires careful planning and dedication. Research your chosen niche, understand your target audience, and create a solid business plan to guide your efforts. Be prepared for challenges and setbacks, as they are an inevitable part of any entrepreneurial journey. However, the lessons learned from overcoming these obstacles can be some of the most valuable takeaways. Number 5, strategic debt payoff. While this might sound counterintuitive, strategically using a portion of your $10,000 to pay off high-interest debts can be a savvy move. Certain debts, like credit card balances, can accumulate interest at rates that far outweigh your potential earnings from investments. By reducing or eliminating these high-interest debts, you're essentially securing a guaranteed return on your money while improving your overall financial health. Debt payoff can be seen as an investment in itself. When you pay off a debt, you're not just eliminating a liability, you're also freeing up future income that would have otherwise gone towards interest payments. This newly available income can then be redirected towards savings, investments, or other financial goals. Consider this scenario. Let's say you have a credit card balance with an interest rate of 20%. If you invest your $10,000 in a moderate risk investment that yields an average annual return of 8%, you're potentially earning less from the investment than what you're losing to credit card interest. This is a classic case where debt's high interest can erode potential gains from investing. By redirecting a portion of your $10,000 towards paying off such debts, you're effectively getting a return equivalent to the interest rate on that debt. This can be thought of as a risk-free return, as paying off debt guarantees that you're saving money on interest payments. Furthermore, reducing your outstanding debts can positively impact your credit score, which in turn can open up better borrowing opportunities and lower interest rates in the future. It's important to prioritize high-interest debts, especially those that are unproductive or linked to depreciating assets. While certain types of debt, like mortgages, might have lower interest rates and can be considered good debt, high-interest consumer debts can quickly become a financial burden.